Hi everyone, welcome back to our weekly market discussion. Let's take a quick look at how equity market performed this week along with the latest T-bill and T-bond updates. As usual, Ms. Dinushi here with us. Hello.
Hi.
Let's start with the equity market. The SPI fell by 0.47% to 21,350, while the S&P SL20 declined by 0.38% to 6,005 in this week. How would you describe the market behavior of this week?
Yes, Hima, it was a relatively weak week, but not a major correction. The indices moved lower as investors remained cautious. The market also saw some volatility during the week, so overall sentiment was mixed.
One interesting point is the trading activity. Total turnover was around 20 billion rupees, while the crossings was very high 16 billion rupees, making up around 81% total turnover. What does this tell us?
Yes, Himaya. So when it comes to the market turnover, the high turnover was mainly driven by crossings rather than regular market activities. So the headline turnover looks strong, but it doesn't necessarily mean there was broad-based buying interest in the market. So investors appear to have remained selective.
Moving to the T-bills, the government offered 120 billion rupees and received bids worth around 340.4 billion rupees, accepting the full amount. Yields declined across all three maturities. The 3-month yield fell to 9.06%, 6-month to 9.44%, and the 12-month to 9.89%. What does this indicate?
So it shows the demand for short-term government securities remains strong. The decline in yields also suggests that investors are comfortable accepting lower return, which is generally positive for the interest outlook.
We also saw a strong demand at the T-bond auction. While the government offered 50 billion rupees, the received bids around 234.9 billion rupees and they accepted a full amount. Yields declined for both maturities. How do you see this?
That's a strong response from investors. The high bid volume shows good demand for government bonds, which lower yields suggest improving sentiment in the bond market. So the overall fixed income conditions remain supportive in the treasury bill and treasury bond market.
So, putting everything together, how would you describe the overall market behavior?
Yes, so when you're looking at the overall market behavior during the last week, Himaya, so I would say the market was cautious in equities but positive in fixed income market rather than in the equity market. So equity indices declined slightly while the high crossing activity showed that much of the turnover came from negotiated transactions rather than market transactions and in the normal transactions. So at the same time, strong demand and decline in the yields in the treasury bill and treasury bonds are encouraging signs for the equity market.
So, despite the slight weaknesses in the equities, the broader market environment remains fairly stable.
Yes, exactly, Himaya. So equities are showing some cautions, but strong demand for the government securities and lower yields point in improving investor confidence in the fixed income market rather than equity market.
Great. So, while equities remain slightly under pressure, the fixed income market continue to show positive signs. That's all for the week's market discussion. Thank you for joining us. And we will be back the next week with more market updates. Stay tuned with Senfin Research.